Welcome to the InvestFourMore Real Estate Podcast. My name is Mark Ferguson, and I am your host. I'm a house flipper. I flip 10 to 15 houses a year. I own 13 rental properties with a goal to buy 100 by 2023. I'm also a real estate agent. I've been licensed since '01. I run a team of 9. We sell close to 200 houses a year. So on this show, we like to interview house flippers, landlords, and the best real estate agents in the business. So stay tuned for some great shows. If you want more information on my rentals, on the numbers, how I buy properties, check out InvestFourMore.com. Hey everyone, it's Mark Ferguson with InvestFourMore, and welcome to another episode of the InvestFourMore Real Estate Podcast. Today, I've got two exciting guests on, Rick Allen and TJ Osterman, who are with Paperstac, a note investing company. So I know my blog is a lot about flipping, real estate agents, rental properties, and we don't talk much about notes, and I've never invested in notes myself. So I think it'll be interesting to hear what they have to say about notes, how they've built a business around it, and maybe we can all learn something. So Rick, TJ, thank you so much for being on the show. How are you guys?
Doing well. Thank you for having us, Mark. Really appreciate it.
Yeah, doing great, Mark. Thanks for hosting us.
Yeah, no, thanks for being on the show. I love to start every episode just kind of getting some background on how you both got involved in real estate. So maybe we'll do one at a time. TJ, how did you first get involved in real estate, and how did that kind of evolve to where you are right now?
Great. Yeah. So I'm originally Chicago native, and I'm living in Florida now. I've been here about 20 years. So when I originally came from Chicago down here, I was actually going to be a teaching pro in golf. And so I came down here, was studying to become a teaching professional in golf, was working at some country clubs, got an opportunity to invest in a very hot Florida market with my first real estate transaction, and ended up flipping a house, making $30,000, and said, you know what, I'd rather play golf and probably get in the real estate business. So I got into the real estate business that way, bought and sold a few things, swung the hammers, did everything, which I still enjoy actually doing. And the note business, we haven't had to pivot too far from our original discipline of buying and selling homes. So got into that, and then started working for a bigger institution that had about 15, 20 offices nationwide, where we were dealing with sourcing hard money for investors, and we had the inventory also. So we were kind of a wholesale shop that had the hard money tied to it. So we kind of got to learn about the debt piece there, which is very important when it comes to buying and selling houses, real estate, or investing in anything, is that where you're getting that investment money from. So we learned a little bit about the hard money space there. We bought and sold 400 plus houses, I think. And then we, from that point, ended up opening up, Rick, myself, and a couple other partners branched off, opened up a few other of our own offices, took what we learned from that other company and ran with that, and had about 20, 25 employees working for us, all sourcing inventory, sourcing houses, hard money, fix and flips generally, with some rental stuff going on there also. And, opened a few offices, and then realized, man, we don't really enjoy managing a big group of people. And we were kind of thinking, let's go do our own thing. And so we had an opportunity to buy a mortgage note, and it took off from there. And I'll digress from there and kind of let Rick jump in and kind of give you his background a little bit.
Cool. Yeah, thanks. Yeah, Rick, love to hear how you got into it too.
Pretty similar to TJ. I'm from the Midwest, from Columbus, Ohio, moved down here at a real young age, went to University of Florida and the University of Central Florida. And when I got out, I didn't really know what I wanted to do. So I decided to get my real estate license, and kind of went through the timeshare thing, where you learn to sell something that nobody wants, and kind of cut my teeth in sales there. And then joined that same institution that TJ was speaking of, and started sourcing inventory, and TJ and I both got pretty good at identifying deals and kind of learning what I would say is probably the core of what you need to know when you're investing in real estate, on how to just identify fixing, flips, or rentals and investment strategies. And, after we had started our company and then sold it off, and TJ and I were kind of running solo for a while, just doing our own thing, fixing and flipping, we noticed that the inventory was starting to get, I guess this was late 2011, early 12, it was starting to dry up, or it was getting more difficult, I should say, more difficult to buy, because a lot of the hedge funds, black Blackstone and what have you, were coming in there buying stuff at the auctions. And somebody asked, do you guys want to buy a mortgage note? And so we jumped in, and it was a frame duplex. I'll never forget it. It was a frame duplex. The debt on it was $90,000, and we bought it for $8,400. And, after we got the borrower to sign the house over to us, did a deed in lieu, and we had it listed and sold. And I think we listed it at $19,000, and it wound up selling for $38,000. And so we were in and out of it in just under 3 weeks. And so we kind of looked at each other and said, wow, this is crazy. And, we did, a handful more deals over the next year, and wound up going and showing what we're doing to somebody after we got some education in the space. And somebody said they were going to, they said, here, you want $1 million? I'll give it to you if you want to invest and do what you're doing. And so we kind of took their money, not all at once. We never really looked back. And so now we're currently run a small portfolio of just under $6 million, and we're in the process of doing a Regulation A+ offering where we can start raising a substantial amount of capital and really, kind of foster our mission of trying to save people's houses and bring some light to this space.
I know when I was first starting out in real estate, I got my degree at the University of Colorado, and my dad had been a realtor forever. I didn't want anything to do with it. And I reluctantly joined him, got my license, and got sucked into the business. So it sounds kind of like Rick, you kind of joined the same way, but I'm sure you're glad it all happened that way.
Exactly.
It's funny too, Mark, because for most like you were saying, most of your listeners are people that are in the real estate industry, right? That are buying and selling houses or rental portfolio, correct?
Yes, for the most part.
Yeah. So, when we're talking about notes for us, we're in the same exact, if anybody out there is listening, we're in the same exact space as you guys are. And, we just thought of the mortgage note business as really being a really good way to diversify our portfolio and to learn some new disciplines and kind of become the bank in a way, because we were seeing how much power those banks had when we were trying to, trying to bid on the REOs. Well, now we control the REOs. So really the nice thing about it for anybody listening that's really kind of possibly interested in the mortgage note industry is that it's not a whole big, huge pivot away from the disciplines that as a real estate investor. With real estate investing, you're buying, let's just say if you're in the fix and flip, you're buying something under market value. You're going in, you're adding some value to it, however that may be. Maybe you're putting together a really nice investment presentation and just wholesaling it to somebody. You are adding some value that way. But if you're fixing the house, also fixing it and then reselling it. Now, to kind of align that with what we do, we just buy broken mortgage notes, and basically fix them, add some value to them. And then we sell them to investors that are actually looking for reperforming loans, kind of like people that like cash flow rentals. They have a portfolio of, let's say, 10 to 15 rentals, and they love that cash flow. But a lot of the people we talk to really don't like having the toilets, the fixing, the air conditioning units going out. So there's another type of play where they said, you know what, I like that cash flow coming in, but as a holder of the mortgage, they are continuously paying me even if that toilet breaks or the roof caves in. But there's room for both, and it's just it's a diversification play that anybody out there listening, is a really nice segue into different investment strategies for sure. Yeah. So it's not that different.
I agree, TJ. It dovetails so well with somebody who's already in the real estate investment space. A lot of the same core disciplines of evaluating a house, putting a value on the house, I think we can all agree is so important on just about any investment. If you're going to do it, you want to know the value of the investment. And that's a lot of those same disciplines transfer right over into mortgage notes. There are some additional stuff you need to know, but it is a nice way to diversify. And for the guy that's looking for the passive income and not deal with the toilets, it's a great, opportunity or addition to holding rental portfolios. for sure.
And, one thing I just want to interject quick, and as anybody in this space, whether you're in real estate or whatever, man, you got to have inventory. You got to have deal flow coming in. And we saw, as I think it's as of January 17, industry leaders say that there's around $300 billion in deeply defaulted mortgages yet to be touched in our industries. So that's a lot of mortgage notes. And without going too down the rabbit hole into the mortgage note specifics, there's a lot of inventory there to deal with. And we're dealing in, just as we did with the real estate space, we're dealing in small ballage mortgage notes, meaning low to middle income families, I'd say 50 to 170,000 max house value. We'll say asset value and below. So there is just a whole bunch of inventory in the note space. As long as you're willing to take one that's got a little bit of hair on it. There's going to be hair on these deals that we enjoy doing that because we've, the houses that we bought when we were buying and selling houses all the time, 10, 15 every month, we were falling through the floors. I mean, nothing really scared us because we realized that, everything can be fixed. And that's same type of thing in the mortgage note industry. There's a lot of paperwork, a lot of different hats that you may wear, but you can leverage it big time by utilizing third party servicers, third parties, people that are doing your loss mitigation and due diligence, which we'd be happy to share, in show notes or something afterwards, Mark, with anybody that would be interested in knowing a little bit more about where to kind of go with it. But
yeah, for sure. You could all just send them to Note Force Academy and they can learn as much as they want there.
Yep. Yeah.
We'll have a link to that in the show notes for sure. But you guys, you made some great points about inventory because I flip houses myself. And I think we're going to finish up with about 26 sold this year and bought 28 more around that number.
Right.
Yeah, I hear all the time how there's no houses to flip anymore. But I'm buying some houses that have issues, just like you said, that it's not, There are a lot of people buying stuff after the housing crash that needed paint and carpet and you can make 30 grand on. And that doesn't happen anymore for the most part. So you have to work hard to find deals to really make the business work. It's not something that'll fall in your lap. Anything, whether it's flipping notes, anything like that.
Yeah, those days have kind of gone and passed. I mean, it was like 08. What was it, Rick? When we were really killing it, 05, 06.
Yeah, I think definitely like that 05, 06, and then the 2000 10, 11, where it just seems like at those both, right before and then right after, anybody and everybody was jumping in. And if you were doing it before the crash, you were just getting sucked up when values got sucked up. It was just rising, so there was no issues. You could get into a house and you could make a really bad buy and still make 30 grand on it just because things were going up so bad. And then after the crash, the banks were just literally, they didn't know what to do. So they were just getting rid of houses at such an astronomically low rate that you could get in, put, like you said, paint and carpet and get out of the house. And you looked like you were an absolute genius real estate investor. And those days have kind of been weeded people out now. And, you have the professionals like yourself, Mark, who are still in there. And it does take some expertise to get in there and navigate this landscape and come out on top. And, so that's, I applaud you for still doing that.
Yeah, Mark, it's interesting because you made a very good point of that you're having to pivot and maybe change a little bit different on how you're buying, your buying strategies. You're not tarnished from what used to be. I hear a lot of at like real estate investing clubs that will attend and everything of like, oh, back in the day, da 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 da. Well, I mean, it's not like that anymore, and everybody wants that home run. And it's unfortunate that sometimes people get into an industry or a space and they kill it like they did with the real estate industry, and then they realize maybe that the margins are a little bit thinner now and everybody kind of gets disheartened. And like you said, there's no inventory. It's so easy to get negative and be like, oh, there's no inventory and everything. And you're just a perfect fact of, look, man, I'm still doing it. There's different ways. And that's kind of, that segues really back into why we kind of wanted to diversify into the mortgage note spaces, because it kind of gave us another couple options to another couple lakes to fish in for inventory. So yeah, it's like you said, you can't expect to, the things that are constantly going on are change, right? It's going to always, the market's always going to change. So you kind of have to be able to adapt to those changing conditions.
Right, exactly. And then there's a lot of people as well who are kind of waiting for another giant crash and opportunity to come along like there was before. but I don't think we'll ever see it as bad as it was. I mean, maybe I'm wrong, but with all the giant hedge funds and the financing is so different now, I don't think we're going to see a crash like we did before.
I agree with you. I don't think so. I don't think that, there was kind of a mathematical equation that happened when the rates went up, that there was just going to be X amount of defaults that were going to happen. I don't think that's going to happen. I do think that there maybe has been a little bit of desensitization to foreclosure in the country. I think people maybe looked at it and said, well, it didn't actually work out so bad for those people who went through foreclosure, and they didn't, their heads didn't roll, they didn't go to jail. Things kind of didn't work out, but it wasn't the end of the world. So I wouldn't be surprised if there was a little dip that you'll see maybe a spike in foreclosures again, or a spike in default. Hopefully not a spike in foreclosures. I think now with the way the landscape has changed as far as what TJ and I do, there's a lot of people tackling the loss mitigation side with real world sort of tactics to keep people in their house. But I wouldn't be surprised if there was a little spike in defaults.
Yeah, no, I would agree with that too. And no, it's interesting you say that, because our county would have 30 to 40 properties going to the foreclosure sale, right after the crash, even during the crash. And now we have maybe 1 to 2 going to the sale per week. So you see that a lot, I think, where a lot of loans are being taken care of before they go to foreclosure. Because our market's doing so well, there's a lot less going into foreclosure, and then investors are buying a lot of them at the sale too. So the actual amount of foreclosures here in Colorado is almost minuscule compared to what it was before. It's just crazy.
Yeah, I can tell you that the cash burn from holding non-performing mortgage notes on books is insane. We're managing 125, let's say, notes right now, and that's small potatoes in the business that we're in. I mean, people are trading hundreds of millions of dollars worth of mortgage notes every single month. And, but just the cash burn that goes on from managing 125 of these things is insane. So a lot of these institutions realize that just to be able to then sell, they want to just sell that non-performing mortgage debt to independent investors. And really, there's kind of a waterfall effect on how this whole niche kind of industry was created. The big, huge funds were trading back and forth. They're selling thousands and thousands of notes back and forth. They'll work the mortgages for a while if they're not performing. And then what will happen is if they kind of hit a roadblock, then they'll just trade it off on their books to another.
TJ, just one real quick. Just when he says trade, that's kind of just an industry jargon term for like sell off the loans, because I'm sure some of the listeners are going like, what do they mean?
I'm sorry. Yeah. Trading means just, we're not trading like for, it's buying. I know when I say trade, I'm like, when I first heard that, I'm like, wait, you guys are just trading? No, that's it? Just trading stuff? Thanks, Rick. Yeah, that's exactly. They're just buying and selling loans. So these huge institutions are buying and selling thousands of loans. When they kind of hit a hiccup with one of these, like a group, like a tranche, they'll call it, of like these non-performers that are low balance, the amount of money it costs to actually maintain it and the disciplines, like the specific disciplines it takes to reach out to these borrowers, they're just like, we don't have an appetite for this stuff. So what will happen is these huge institutions will just kind of sell these. And as you can imagine, like a waterfall, a funnel effect, they kind of just keep picking the cream of the crop. And then eventually down at the bottom, there will be what they call tail of a tape. They'll have these tails on these mortgage note pools where there'll be like, it's just like a pool of REO investments. Let's just say there's a huge pool of REO investments, like let's say 1,000. Everybody gets their hands in there, takes the best stuff. And then at the end of the day, there's might be like 10 or 15 that are just like the turds in there, and nobody really wants them, but there's still an opportunity there. The same thing with the mortgage note industry. And we kind of carved out our niche to buy those tails, realizing the fact that every time that these mortgages are being traded back and forth, there's like real world people on that other end and their families that are kind of in a kind of a purgatory going, am I going to have a house? Because they call it the foreclosure merry-go-round in our business, right? It's like I'm sure you've heard many people that have talked about, trying to modify their loan, and they sent the paperwork in and the paperwork got lost, or their loan got sold again, so they have to restart. So this is kind of going on, and it's become a major, major issue that kind of Rick and I realized originally getting into the mortgage note industry to just as a source of inventory for our real estate business, to realize that there is a major issue going on here. And, we're just a couple of guys that, looking to take on that, that affordable housing issue and provide sustainable living situations to the underserved people in our country. And we're doing it through mortgage notes. So there's like kind of this whole other thing that is going on out there that you can kind of tap into, aligning kind of money and meaning at the same exact time. But there's so much different things happening. I mean, it's an exciting time to be, I think, in the real estate space and the mortgage industry.
I'm curious. I don't know if you guys know this answer or not. I used to be a HUD listing broker, REO agent. I'd sell those foreclosures all the time. When I was doing HUD, they had started to sell off pools of HUD loans as well. Or I don't even know if it's the loans or the actual properties. Do you know if HUD is still selling those off, or are they keeping them now? I know it's kind of an off-topic question, but
oh, that's right. That's right on topic. Yeah, they are selling them.
They're selling them off.
Yep.
A lot of them.
Yeah, they're still selling off. And Fannie and Freddie, I think they've sold off, I don't even know the numbers, millions of these non-performing loans that they had on their books. And so there's
the last trade they did was something like 2.1 billion they sold off.
Yeah, there's so much untapped inventory out there that's interesting, that a lot of this stuff too for real estate investors, a lot of this is, if you don't want to be in the business of reaching out to the borrowers and getting them reperforming again, if you just want the inventory, there is thousands of mortgage notes that are sitting vacant that are obviously causing to the decay of many underserved communities in our country, because they're just sitting there for 6-7 years and they're stuck in the mortgage note purgatory. Nobody wants the mortgage note. Nope. So nobody can actually legally get the title and deed into anybody's name to sell it. Right. So it's just like sitting there on a bank's books, to the detriment of, like, I'm sure, Mark, if you had an opportunity, you'd be like, yeah, I'll buy these houses that are sitting there vacant. Unfortunately, it has to go through that whole process and they're kind of just sitting there in a purgatory. So we're trying to get as many of these things out from under there as possible, and reaching out to funds and banks and whatever to get these, to buy these from them. So yeah, the HUD is still selling them. And that's, I believe, you're going to start to see that more and more and more, unless hardships go away, there's always going to be non-performing mortgage debt. And for everybody out there, basically a mortgage note, what we're buying is a mortgage note. And the note is basically just like it's like a check, you could kind of imagine, right? It's the debt. It's basically going to give the terms of what somebody borrows. So that's legally what you can buy as an investor, is the note. And then that mortgage is just the legally binding instrument that ties it to the collateral, which is the house. So it kind of like all wraps into one there. And so the note just basically says, okay, Mr. Borrower, you borrowed $100,000 for this house at 8%. Here's the terms that you're going to agree upon. And if you default on those terms, we can actually then, as the note holder, go back and sue you for foreclosure, is basically what they're going to do based off the non-performance of your intentions. So that's I don't want to dive too deep into that because it's not that interesting basically, but it's that's all that we're buying. For people that are wondering what the hell we're buying, is it's the mortgage note. So there's a difference. So I Wikipedia'd it, you do all that stuff, and that'll kind of get you an idea. I never knew about all this stuff, back 6 years ago before we bought our first mortgage note. Now I'm like, I dream about this stuff. I don't know. I'm just so enthralled with it. It's wild what's happening out there.
Are you guys buying notes all over the country, or is it kind of market specific? What's your strategy as far as that goes?
We buy all over the country. We started buying in our backyard, started buying in Central Florida, and then sort of spiraled out. And then once we took in some education and kind of got our feet wet and really learned the space, we started buying nationwide. And now, since we are kind of focusing on keeping people in their house, we lay a filter over it that we kind of try to buy in areas that have a government program called the Hardest Hit Fund, which it's a really fantastic program that the Fed funded 9.8 billion to like the 22 states that got hit the hardest in the crash. And they basically divided up money and gave it to them to distribute to the people in their state who fell behind and had a hardship. And essentially that money gets paid directly to whoever owns the mortgage to catch them up and keep them in their house. So we've sort of used that filter, as obviously it's nice to have funding there, since we are trying to keep people in their house to help catch them up. And then, we also look at non-judicial states, places where you don't have to go through the courts through a foreclosure if we have to go that route. But yeah, we're buying, we still do buy in stuff, places that don't have hardest hit fund and don't have anything or don't have the judicial system in place too, though.
Well, what's good, great point about the hardest hit fund, Rick. And a great point about this whole thing is that as real estate investors, we felt like we had to lay our hands on everything, like physically, and we didn't feel comfortable buying anything. I would never think of buying a piece of real estate without like laying my hands on it and going there and like looking at it and managing the project. And the mortgage note industry really opened our eyes to the available technology out there in today's world, and to be able to compete in a very competitive market, which is real estate investing. You have to be able to spread your wings and have some confidence and kind of use the technology as a lever, in your business, and take that risk and do buy in other areas. We started in Florida, and then now we're nationwide. And to tell you the truth, we didn't miss a beat. You sleep better at night when you don't. I was going over to every house I was buying and selling. I was going there every single day. I was worrying about like the littlest things, and it was kind of hindering, the growth. So being able to utilize technology nowadays with like Google Earth, you can drive the neighborhood, pick up the phone, call the local realtor in the area, say, hey, can you lay some highs on this property? Different stuff like that, different strategies. I think for any investor out there to do it, I think is a really, really should be a move they should look into in 2018. Maybe buy something out of their comfort zone, because there's a lot of inventory all over the country that there's opportunity. And if you can put a system behind it with some technology and to safeguard yourself, I think you're gonna see that you're gonna open yourself up to a little bit more opportunity. And before, and one other thing I wanted to touch on before I forget is that just a scenario on a hardest hit fund program, which is very interesting. Rick, it's a federally funded program to catch up borrowers that fell behind. The one problem with it is that it was very difficult to navigate, just like any conditional welfare program that we have in our country. It's like the paperwork is confusing. People are like, what the hell? It's like filling out tax forms, right? It's just confusing. And then you're dealing with somebody that is feeling like, living paycheck to paycheck, possibly earning $25,000 a year. They're just not able to function and complete this stuff. So it's a very hard program from that aspect. So we kind of help grease the wheels a little bit for those underserved borrowers and make it a little bit easier for them to fill out the paperwork by putting some technology behind it and letting them just answer a few questions, and we do that autofill. But just to kind of do like a quick thing on that hardest hit fund program is, if you're buying it, let's just say we bought something at like, let's say $30,000, the house is worth $50,000 and there's a $30,000 mortgage on it. And, the hardest hit fund program I think it's up to like what, Rick, 25, 30,000?
Yeah, it just depends. Like they will, for instance, the one we did one in Jackson, Mississippi. The debt on it was 70. We paid 12.5 for it. The house was probably worth, like you said, it was probably worth right around 45,000. And they paid 18,000 to catch her up on her mortgage, and then they agreed to pay another 24 months of payments. And they guaranteed her payments for the next 24 months, and so every month they would just send in a payment. So that it came out to right around 36,000 total.
So there you go. That's what I was trying to get at, is that like an investor, you're looking at one thing, and that's numbers. How can I recap my investment faster and get that money back in faster? And we saw a program like HHF, by just applying a little bit of technology and innovation to it, we can really, really dive into it and help more of these borrowers out, number one. And number two, we're the ones holding the mortgage note. So if we're into it for 30 grand and we just get recapped at 30 to catch the borrower up, we're into this note now for $0. And then they're
plus on that one.
Yeah, and plus on that one. And then they're guaranteeing 24 months of payments paid by the government. Okay. So it's like, if we wanted to sell that income stream now, we could sell 24 months of guaranteed payments almost at that level, what they would call par, because that's a no-brainer. If I'm going to buy a rental property and they say, oh, you buy this rental property and we're going to guarantee your rent for 2 years, I'm like, yeah, sign me up. I think I like that one.
We were real. I guess, TJ, wouldn't you say we're real? It's just identifying the inefficiencies there. There was a super inefficient process, and we were able to capitalize on it. I think that's kind of what most of the investment stuff is, right? The inefficiencies after the crash of the banks liquidating assets. That's really all we did.
Oh yeah, and any investor, that's what they're going to be looking at, is like, how can we take a system and make it better and kind of open it up a little bit more. And that's kind of what it is. And it kind of just touches on, look, as a real estate investor and you're looking for a lot of different exit strategies, is another benefit of mortgage notes. On top of that, you have so many different exit strategies that you can do if you're looking at just diversifying into it too. So you can kind of get pretty creative with it.
Mm-hmm. I had never even heard of that fund before. So that's interesting. Do they
see what I'm saying? And it's like, and I'm sure you know people too that, I don't know if you know personally, but like, are behind on their mortgage. And the funny thing is there's this huge carrot. Nobody advertises this.
Nobody knows about it.
It's 22 states, and we'll put it in the show notes afterwards of the link it, how much money is sitting there. And you know what happens, Mark, if they don't use it? They take it, they get rid, it's gone. They get rid of it. It's like unused. And so what I'm thinking is without going into like too much of a conspiracy theorist, although it is fun being a conspiracy theorist, what happens to that money? It's like, where's it going? I mean, obviously there's some people there going, this is like an untapped amount of money. I think we'll just not spend it and make it hard for these people. And you go where you want to go with that. But yeah, there's just one situation, where you can look that up. HHF funds, hardest hit.
It's the hardest hit fund, and it's a great program that nobody knows about. I think that was one of the biggest things that we started doing with the loss mitigation was actually informing each one of our borrowers about it. And they have another program out there, another hardest hit program that if you've been making your payments and say you're upside down on your house, say you owe 100 and it's worth 75. If you're current on your payments, they'll come in and pay your house down to the 75, and they'll pay that directly to whoever holds the mortgage. So there's there's a couple really nice programs out there that as a note investor, you can sort of take advantage of. You
know what I'm saying too, as a real estate investor, let's say from that point that owns portfolios of rentals, I almost want to say that there's a program out there too, that if you did a little search on rental assistance, I know obviously there's like the Section 8 and all that type of stuff.
Section 8, yeah.
There are other things to where, if you are like in an underserved population, if you own a bunch of rentals that are, low to middle income areas of the country, and these people, they don't want them all on the street, So there's programs out there. It just shows that you just got to get on the internet and search for these different types of opportunities, because they're all strategies that, one, you come out looking like the hero and you really didn't do much, but just look into it a little bit more. And you went into it if you do go into it with the right mindset of, look, man, I just want to help these people out, kind of maintain their home, and at the same time, shit, that's my rental. I got to get my rent paid. So there's different stuff out there. It's amazing what you kind of uncover.
Yeah, no, I mean, that's amazing information that I need to look into myself. What is your strategy as far as exiting these notes? I know you've talked about selling them to people looking for more cash flow. Are you holding some? Are you trying to sell all of them? What's your strategy there?
We definitely are holding them right now. We are putting together, like I said, we're putting Regulation A+ fund that we would like to sell this portfolio into. And so, everything we purchase as non-performing. And I think we've got right around 65 to 70% of them we've turned into performing. And so we have large institutions that have bought from us. They'll take them up and we'll package them up into, micro pools of say 5 or 10 assets at a time. And once they get seasoned up, but that's obviously once you get them, if you're buying them at 30 cents on the dollar, you could package them up, collect payments on them for a year and turn around and sell them at, 75 to 80 cents on the dollar. There's that's your spread. And that's really what we're doing. And we're utilizing, like you said, we're from Paperstac. It's a trading platform where people can go buy and sell stuff. So we have a lot of people who are in the SIDRA space and the self-directed IRA space who are just looking for that. They're just seeking yield. They're able to go onto Paperstac and buy assets one-off. So they can go, and I think we just sold one the other day at like an 18% yield for somebody, which was pretty insane, but they were happy about it. I guess so were we. We made our profit and went out and were able to save someone's house and turn them over to another investor is able to handle them with, the kid gloves that some of these borrowers need.
Yeah, I mean, and that's the big space. If anybody's listening to this and they want to source capital for deals, just look into the SDIRA space, the self-directed IRA space. It's a $14 trillion industry, and that's kind of the $14 trillion question right now. Who's going to be able to tap into that? In a time right now when majority of America's retail investors, let's say, are really sick of the roller coaster of the traditional stock market. A lot of the baby boomers and a lot of people just in general are looking for that are very yield hungry. They do not want to start investing in other mutual funds. They're just sick and tired of it. And a lot of people that I meet are diversifying into real estate, or they're diversifying into mortgage notes. And a lot of people are passive, and this self-directed IRA space is gigantic. It's basically saying if you got a 401k or IRA, you can roll it over into a self-directed, like to a custodian, like a New View IRA or something, where they will allow you to self-direct that investment as long as it's a qualified investment. And I'm not going to dive into the legalities of it, but you can just start typing into SDIRA and start doing your own research on it. But that is a giant source of untapped money, to where people are looking to, if you want to buy some houses and there are some people that you just need some money to partner up, say you're going to bring the sweat equity and they're going to do the deal, they're going to bring the cash. There's their money sitting right there, and they can actually buy it in these self-directed IRAs. And you can negotiate, you can do deals like together that way. There's a lot of good opportunities to do that. And to tell you the truth, it's a huge shift into the alternatives type of market, which is like real estate, and everybody's looking to diversify. Up until, like the Jobs Act coming along, unless you're a Wall Street elite, you are not able to diversify across many asset classes like alternatives, like real estate and all this type of stuff. You just legally couldn't do it. You had to be an accredited investor, meaning you had to be worth $1 million, yada, 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 all that stuff. And now you're able to, as a non-accredited investor, invest in these all different types of alternatives like real estate in your IRA and mortgage notes and all this types of good stuff. And with now, like, let's say, for instance, Paperstac, we're developing, is allowing investors to come in and really, really access this space and not have to take a $40,000 mentorship course for it. Because basically all you really need is you need a system and a process put together. And that's kind of what Paperstac is. It's a system. It's a really nice process that's going to get you in from source the inventory for you and take you all the way from A to Z. And you're not going to be able to move that next step unless you cross all your I's and T's. So we tell everybody to go to Paperstac with the C.com, not with the K, and check it out, because it's really a really technology piece for people that are looking in the mortgage note industry, if you are looking in there.
No, I was going to ask you, one of my next questions was, if you're looking to buy some of these notes, you want to diversify your investments, how do you find them? How hard is it to find these notes, and what steps do you take?
Definitely Paperstac is a place to start. We didn't start there. We started buying from some of the hedge funds, but, and there's other trading platforms out there. I would just, Google mortgage note trading platform, but you need to know how to run your due diligence. That's the one thing I would really encourage everybody to do, is to get some education on the space, whether you're going to the Google University and just Googling stuff, or you go, pay for a mentorship, or you go, an online stuff, like we said, we have Note Force Academy, which is an online thing for people to learn, but you want to get some education, because you got to learn the process of running your due diligence. Like I said before, there's a lot of the stuff that mirrors real estate investing, running values on properties, looking at title to an extent. I know if people are buying at the courthouse, they probably are somewhat familiar with going and looking in public records, but you'd want to go there, and then you want to just start looking at inventory and running mock tapes or mock data on stuff until you feel comfortable, and then finally jumping off and pulling the trigger. I know, Mark, you said you've had some experience in the mortgage note space but haven't bought one yet. I'm sure you could attest that there's a lot of due diligence that goes into mortgage notes, and you want to make sure you cross all your T's and dot all your I's before you jump in.
What the best thing to do too is like these huge, like bigger pockets and all these, I'm not advocating saying that bigger pockets is the best place on earth. But what I'm saying is that all of these places like that, if you just type in and say, look, man, I'm looking to I got some money. I want to look in the mortgage note industry and I'm looking to buy some stuff. You could, or just around your local real estate and your REIA clubs, and you can team up with somebody. That's the biggest thing to do. I think the real world experience is do your research and then learn and do all your research on the computer. But really, the biggest thing I see at all these conventions we go to is they've been we've talked to people that have been in the mortgage note industry, and they're just for 2 to 3 years, and they love going to all the conventions and they get all hyped up. And then you ask them how many mortgage notes they bought, and they're like, none, we haven't pulled the trigger yet. And you're like, well, you're missing a huge piece there that you're just going to learn so much by just going in. So it is scary, but you have to, I think, in my opinion, is kind of team up with somebody that's done it before and kind of dive in there. And, there's inventory available from all over the, $8,000, our first note was. And so, yeah, like Rick was saying, there's mortgage note trading platforms, which we love the best. It's like going to eBay to shop for notes, because in the past, why we actually developed Paperstac was it's like looking at hieroglyphics when you look at this spreadsheet of what they call tapes of assets. There's 50 rows and 50 columns, and you're like, unless I have a PhD in Excel, I don't know what the hell I'm looking at. I mean, honestly, it's your eyes are bugging out of your head. You're like, what? How am I supposed to sort through this? It's overwhelming. And so when people like ourselves get overwhelmed, we say, this is maybe too much. I'm not going to do it. So that's why we kind of said, this is ridiculous. Let's make it easier. Let's make it more of an interface for people to kind of shop for these things and team up with the right people to make it happen. And, we have a great demo too that anybody can kind of go through to kind of get the idea of what that process looks like. We have new stuff coming where we want to do, modeling and all this type of stuff where it's, where people can run through with like fake money. We're still talking about that. So like Rick said, there's so many different little places to go, but I guarantee if you're in the real estate investing space, you might know somebody that does it and say, look, man, I'll team up with you on a deal. But like Rick said, the biggest thing, education, just continuously educate yourself.
Yeah. And I would say, Rick, too, when I was looking at it, I think one thing you have to consider as an investor is the worst case scenario. And if you do have to foreclose on a note, looking at your own state laws and what that process is, or whatever state you're investing in, is one of the biggest things to consider because it's so different in every state.
You're so right, Mark. It is completely different from one state. I mean, we're in Florida and the next state over is Georgia. In Florida, it can take us, 2, maybe 3 years to foreclose and, a $20,000 foreclosure bill. In Georgia, you could possibly have the house back in 90 days and it costs you $2,500. So, and that would be kind of the difference that I was talking about earlier between a judicial state being Florida and a non-judicial being Georgia. It is so different. You do always have to look at worst case scenario. And whenever we make, a buy on an asset, we're always, you always plan for the worst and hope for the best. Or we have our strategy, but we always have that, hey, we may have to take this thing and go the distance to foreclosure. So what does that look like coming out on the other side? And it better have, some upside or at least a break-even point if you have to go that route. So yeah, that's a great point.
Yeah, you got to build it into that price, right? So, you're kind of getting into it. You're looking and saying, okay, it's Florida. It's a judicial state, which basically means you got to run through the court system to get this thing back if you can't negotiate with that borrower. And you're looking at $5,000 to $10,000. So when I'm going in to bid on something in Florida, I'm going to build in a holding cost of, legal fees of $8,000. I just take the difference in between there and then work my numbers that way. And if you can make the buy that way and you can forecast a lot of the times you can forecast what you're going to actually be costing yourself to run your note, because there's so many standards that are there, like servicing is going to be, every month you're going to pay this. The only thing you don't know are like when you get the house back, when it comes to the real estate side of, when you tear the walls open, if you're doing some stuff, what am I going to look into? But when it comes to like just managing the note, you can, for all those engineers out there, you can really forecast out and do a nice budget on what you're actually going to be looking at, like run a worst case, best, middle case and best case scenario on it. And if you're comfortable there, heck man, pull the trigger.
Yeah, no, I completely agree. Another problem I had too was I'm in Colorado, which is a non-judicial state, which is really nice. It's not that hard to foreclose here. But from what I was looking at, there are very, very few notes in Colorado.
Yeah, Colorado is scarce. Colorado is tough to find assets there. Believe me, we've looked. When they come up, they usually go pretty quickly. You guys have a real strong foreclosure process to get the house back in. Your economy is just really good. So, we briefly touched on it earlier.
If anybody's got Colorado notes, we'll buy them.
Yeah. Send them our way.
Mark will buy them. I mean,
That's right.
Mark. Yeah, it's a really good area. That's, so I don't know. Have we even had one, Rick? I think we had one.
No, we didn't. We have not had any.
Vegas. I think we had Vegas. Vegas was a good one. California.
We had Vegas, Arizona, but there's a bullseye right now drawn, or I can't wait to get out to Colorado to go look at one of our assets. It's one of the few that I'm going to go out and see.
Cool. Guys, I think that's all the questions I had for you. We're running short on time. I always ask everyone how to contact you. We've talked about it some here, but if people want to learn more, they want to check out Paperstac, of course, what's the best way to get in touch with you guys or get to the site?
I guess paperstac.com. It's, paperstac.com. If you want to reach out, you can reach out to me. It's rick@paperstac.com. Check that out. And then definitely check out our parent company, which is cloudcapitalmanagement.com. And that's where we kind of talk about all the projects we have going on, with Paperstac and with NoteForce Academy and stuff like that.
Same, TJ@paperstac.com. You can do that. And I think, Brett, maybe we could have Brett, our marketing guy, do something for the demo. Like, I know there's that link and we have that video about Paperstac where it's a really nice demo of we can have them do that and put up a discount code or something like that if they want to do the NoteForce Academy. We'll put that up there also and give it to you, Mark, so you got your listeners get a little bit of a discount there.
Cool. Yeah, I'll add that to the show notes and people can check those out and get there. Cool. Anything else you guys want to add before we head out of here? Anything we missed?
Yeah, I don't think so. I really appreciate you having us on. Love what you're doing, and applaud you for keep on being able to get in there and flip some houses. It's providing a lot of great content for your listeners. I think it's awesome.
Yeah, I just wanted to wish everybody out there a happy holiday and, enjoy this time to reflect with your family. If you have little kids, play with them because it's the most fun ever. You got to get into playing again and just enjoy this time. It's, I just went on that Polar Express ride for the first time with my daughter. She's 4 yesterday. And it was like, wow, I was a little kid on there. So just to, it's a great time of year. And I hope everybody has a wonderful 2018. And if there's anything we can do in our organization to help you, Mark, or any of your listeners out there, we're more than happy to do so. And until next time.
Cool. Well, no, thank you guys. I really appreciate it. Like I said, for those listening, InvestFourMore.com, under the podcast section, we'll have the show notes and all the information to contact TJ and Rick or Paperstac. Thank you guys a lot. Really appreciate it. I learned a lot myself, especially about the hard hit fund. Had no idea that was there. So I'll have to look into that more. And we'll have to keep in touch for sure.
Cool, Mark.
Awesome.
Thanks, man.
All right. Thank you guys. Appreciate it.